From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for June 20th, 2018. Today we're taking a look at the EURUSD, the euro, versus the US dollar for today's trade analysis. Looking back in time here on the daily time frame. We're looking all the way back to the left-hand side, the green circle on the left-hand side of the chart, down into the orange shaded area, 1.1560, 1.1535. You can see support and became a point of reversal. That's where the market found support and started moving higher within the trend, making a new up leg of the uptrend. So significant support and significant reversal point. Now we bring it to the right hand side of the chart into our current time. We can see the last time we were here, let me zoom it in one time. We can see the last time we were here it became a point of reversal as well. Market came right down into 1535, found support, rapidly reversed and went back up into the 1.1800s. What's important about that is that's where we are right now. We're into that same orange shaded area. Once again, challenging it as support, 1.1560, 1.1535. The question is, are we going to see a reversal again, or are we going to see trend continuation? The downtrend, a little bit of a rally. Last week we saw a significant push lower here for the euro dollar as the US dollar appreciated rapidly late last week, pushing back into the support. So we're looking for one of two things really from this orange shaded area. One is what it's done in the past, bounce off of it, become a reversal point, likely to break back above the yellow zone if we're going to confirm that and continue to go higher. So if we're going to look at it as a reversal point, it's bounce off the orange zone, break through the yellow zone, continue to go higher. Now, the other side of that story is that the trend continues. The US dollar continues to appreciate, and buyers continue to jump on the US dollar, and it pressures lower, breaks through the orange zone, which it really hadn't done. We haven't seen anything underneath 1535 without any significant hold underneath there. So the orange zone becomes a pretty distinct area to watch today. Bounce, reverse, break will go lower. 4-hour time frame doesn't really change any of that scenario, just gives us a little bit of a zoomed in view here. We can see right now the buyers are fighting back, aren't they? We can see the buyers fighting back, sending it back higher from the low here, the low here, the low here. The question is, will this become a reversal point? Remember, if you're looking at trend reversal or even any reversal, if you're looking for a reversal, you want to see higher lows and higher highs begin to develop to increase your confidence that it's a real trend reversal. And we don't really have that yet. We don't really have a higher low. We don't have a higher high. So don't really have a lot of confidence yet in actual reversal. Now, if you take some intraday risk as a buy here, you want to get as close as possible. 1.1560. Take your intraday buy, protect profit, target back to at least the yellow zone. Of course, a break of the yellow zone would be the reversal we're looking for. So any intraday buys you take in the orange zone, you're targeting yellow zone or higher, with your risk in any buy situation just underneath the orange zone. That way, if it breaks this pattern and goes lower, then you minimize the impact to your trading account. Now, if you're a seller, if you're looking for eventual return of US dollar strengthening, then there's really only two places to sell it. You either wait for it to come back up here to the yellow zone and find resistance like you did here and here, or you wait for it to break down the orange zone, 1.1535. So buyers are looking at potential intraday buys into the orange zone, stop loss underneath. Looking for the breakout, you're looking for it to get under the orange zone to confirm the breakout to go lower, or at least waiting for lower risk and higher reward back up here to the yellow zone. If you're a seller, your risk right now is above the yellow zone. So how do you make that risk smaller? Do you just sell it now and put your stop loss way up here? I don't think so. I don't think that's a prudent idea. I think you wait for the market to rally back to the yellow zone if you're looking for the short and your risk above the yellow zone. So you know where the risk is. Below the orange zone, above the yellow zone. If you're looking for intraday buys, the orange zone becomes your opportunity. A breakout will look for it to go lower. If you're looking for intraday sells, wait for the breakout or rally back to the yellow zone before looking for those opportunities for the euro dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.